adjustment on. But I just wanted to walk you through how you actually check, on an individual basis, all of your positions. Just check up on them, make sure that you're in that good center position where you're not, you're not getting hurt. You want to make sure that your break evens are on either side. Now, unless the market moves like 1,000 points today, we don't have to look at it again. We look at it once, and we go about our business. It takes about 10 or 15 minutes just to kind of run through each one of your positions. Depending on how many you have, you might have 3, 4, 5, 6, 7 positions, but when you're just starting out, I would recommend 3 positions at the most. Then you can start adding, and as you get used to dealing with individual positions, and you get used to taking a look at them on a portfolio weighted basis, then maybe you could add additional positions. You can go 5, 6, maybe even 7 positions in a diversified portfolio of income trades. You check them out once a day, take a look at them. Hey, they're doing good. Walk away, go have fun, go play with your kids. If you have a day job, go to work, and you don't have to worry about your positions. It's really, really, really a nice way to trade, because you check up on these once, and you're good to go until the next day. So that's it for today, guys. That's how you run through positions. Check and see if any adjustments are necessary. Always go back to and review the adjustment CD, because there's a lot of great information on what you want to do when you do need to do an adjustment. For example, we're going to be doing an adjustment today on this IWM position because it ran up against us. It ran against us quite strong, and we can even adjust this to the point, I think, where we can add additional bit of profit to the position. That's why I don't like that. Even if I'm doing in my regular account, if I'm doing much larger positions in this, 10, 20, 30 contracts, I don't like to add all of my contracts on at one point. I'll add maybe 5, and then maybe another 5 another day, another 5 another day, until I've built up a position where I'm really adjusting for price over a series of a week or so. Between that 35 and 40 days to expiration, anywhere between 30 and 40 days to expiration, then I build a nice portfolio base there. But of course, adjustments are necessary, and if you do add your positions 30 to 40 days before expiration, that gives you time to adjust, which is nice. So you don't want to put on positions like if you have 14 days before expiration. Well, now you're in a position where the prices are running against you. Where do you adjust at that point? It's going to be much more difficult to adjust at that point, because you're not going to have you're going to have greater theta decay, but you're also going to have greater price risk, because you're not going to get the if you're selling calls, if you're doing vertical calls, if you're selling call spreads, or you're selling put spreads, then you're not going to have the prices that you need in order to gain a large profitable position in that over time. So this is the way that I manage these trades. I run through them one by one, and then I take a look at them on a portfolio weighted basis. And to me, this is actually a very, very calm, very confident way to trade, because you know what? If one of these positions gets out of line, I know exactly what to do. I know exactly what to do to fix it. This one is out of line. The only thing I'm going to do is add a couple of, I'm going to lay a calendar on top of the calendar I already have. It actually increased my expiration profitability. You can see the center of this tent is at 405. If I took these off, the center of the tent was only $257. So I actually, not only did I adjust to bring these back into line so that I am right at the center of my tent, but I also increased my profitability by another $150 or so. So there's lots of things that you can do, and there's absolutely no reason for you to get hurt really, really bad in any of these positions while you're trading. And so that's why I always say trade with confidence.